creating wealth through information.
Monday morning again, and this is Follow the Money with Ugo Dre on Classic 97.3. You can follow us on Spotify. You can listen to us on Spotify and other podcast channels. Today, we'll be looking at a number of issues in the market. With the NGX continually asking that more people should get onto the market, we seem to be seeing more companies leave Nigeria. And the question is, why are companies delisting from the NGX? I'll hand you over to my colleague and my friend, Ugo, to take us through this.
All right. Good morning, Lagos. Good morning, Wadi, and everyone who is listening, wherever it is you're listening. Welcome to Nairametrics Follow the Money. We do this every Monday, like Wadi says, 8 to 8:30. Yeah, very busy week last week, I'm sure. Those of you who are familiar with the stock market would have been bleeding red right now. It wasn't a very pleasant week for a lot of us, despite everything that is going on in the country. And stock market seemed to have been the only space that we had been seeing gains. But we've been seeing losses in the last few days, largely driven by banks. Some people would blame the central bank for this because of the bank recapitalization announcement that has basically sent banking stocks tanking. And so we start with the NGX, the all-share index depreciated by 1.39% to close the week at below 100,000 points. Again, 98,000 points, in fact, went even further down. And total market capitalization, it's now 55.5 trillion. And of course, we also saw all the other indices also shed some points. The insurance index, the Maritime Growth Index, Industrial Goods Index did finish lower. All the indexes finished lower except for these ones that I mentioned, the Insurance Index, the Maritime Growth Index, and of course Industrial Goods Index. That saw marginal appreciations. Anyway, where are we week to date? All share index dropped 1.39% week to date. Month to date looks like April is going to be a red month. All share index is currently down 6.13%, except something miraculous happens today or tomorrow. Today is 29th of April. So if something happens today or tomorrow, maybe the bulls roar back in massive form, then we might see the stock market close on a positive note in April. But the way it's going, I really don't see that happening. Looks like April is going to be a red month for investors. So like I mentioned, stock market already down 6% in April. Interesting thing is that April, for historically, let's even see what the trend says historically for April on the stock market, right? So last year, on the month-on-month basis, the stock market lost 3% in April. And in 2022, it gained 5.6%. 2021, it gained 2%. 2020 on this COVID, just before COVID or just at the lockdown stage, it did gain 8%. So April hasn't really been very consistent for stocks in recent times. So it looks like we're going to have the back-to-back losses for the stock market in April. Yeah, and then the year to date, anyway, we're still up 31%. So stocks now below inflation officially. Officially below inflation at 31.2%. Now inflation is over 33%. So stock market returns is now has a negative real return. NGX 30 index also down 1.4%. The banking index, which I said is likely the main reason why we're seeing stocks lose ground, is down 3% this week down 14% year to date. It's just incredible. The banking index was flying, y'all. If you all remember, a few weeks ago when we're all on and on about banking index is down. Even the pension index is likely going to switch to negative this week if things continue to go this bad. All right, so that is the all share index, and we look at the top gainers and losers. So listen carefully and see if your stocks made the top gainer list, if any of the stocks are in your portfolio. Suno Assurance, if there's anybody who has this stock, please just send me a message right now. Send me a tweet or send me any message maybe on the Nairametrics WhatsApp platform. Send me a message. Let me know if you have the stock because I don't know who has it. It's up 25%. It gained 25% last week. CAP PLC, one of my favorite stocks is a stock that is with United Capital, with UACN. That stock is up 20% year to date, doing pretty well. 20% last week alone. Livestock feeds also gained 14% to make it the top 3 stocks. Interestingly, we saw Unilever in the mix. Gained 11% last week as well. And then Lafarge and UACN, UPDC. In fact, the entire UACN family seemed to be doing quite well. They did quite well last week, gaining 9.9% respectively. Lafarge also gained 9%. So those are the gainers. So if you have the stocks, they did gain, and Japol is somewhere in there, gained 14% last week to make it top 10 gainers. And of course, the only tech stock, or one of the only 2 tech stocks in the exchange, or the popular tech stocks on the exchange, Chams, gained 8% last week. And on the loser side, we have Wando. Wando released their results last week for the first time in a year or so, and stock went down 19.5%. Last week, FBN Holdings, after the announcement of a new CEO, stock seemed to have slid 16% to 24 naira last week. Wema Bank also slid 12% to 7 naira last week. Nestle as well, after announcing that they were going to convert some of their shares, some of their loans to equity, did drop 11% last week. Looks like stock market wasn't taking it lightly. So share price now under 800 naira for the first time in a long time, really. MTN as well dropped. For those who are looking for MTN shares to buy at a cheap, MTN looks like it's still at the moment at 202 naira per share, down 9% as well. So that's the roundup of the gainers and losers. And then for those who are looking forward to dividend, if you have shares in Stanbic IBTC, Stanbic IBTC paid dividend of paying dividend of 2 naira 2 kobo for those who own the shares before the 22nd of April. That's if you haven't bought it already, then you can't own this dividend anyway. You're not going to get this dividend. So they're paying 2 naira. Transcorp as well. It's too late to buy Transcorp Power shares. They're paying 3 naira 13 kobo. Stanbic was 2 naira 20 kobo. Transcorp is 3 naira 13 kobo, and they're paying for those who own the shares before the 22nd of April. So that's pretty late. Total Energies marketing company, a downstream oil and gas company, is paying 25 naira per share. Too late already because it's only for those who have the shares up until 24th of April. Transcorp itself, 25th of April, only paying 10 kobo. Okomo Oil, only paying 14 naira per share for those who own the shares as at 26th of April. And of course, Zenith Bank as well, paying 3 naira 50 kobo for those who own the shares as at 26 naira. As at 26th of April. Now, interesting thing to look at. So Zenith Bank is paying 3 naira 50 kobo, and the share price at that date was 36 naira. So if you own the shares if you bought it around that day, you're probably getting 10% return. That's a cool return there. If you compare it to most of the others here, it seems to be the best return for a stock. Let's look at Total Energies, for example. The share price is 346 and it's paying 25 naira. So that's less than 10%. Transcorp Power, for example, 377 is paying 3 naira, and that's less than 10%. And even Okomo Oil, that's paying 14 naira, share price is 246. So it looks like banks in terms of dividend yield seem to be quite great. All right, so that is it for the first segment. I don't know, which of the stocks resonate with you? Send me a message. Send a message on our WhatsApp channels at Nairametrics. Just look for Nairametrics on your WhatsApp channel, and you will find it and follow us. Let me know what you think about any of the stocks. Is there any stocks that you want me to maybe like zero in on the next show? Let me know as well, or tweet about, and I can always do a thread on that stock. Wade, that's it for the first segment. Over to you.
Thank you, Go, for giving us an update on the stock market. We'll take a short break now, and when we're back on the other side, we will be having a guest join us to speak about why are companies leaving the NGX. The NGX is trying to promote so much more in terms of getting companies into the NGX, and some of the long old companies in the NGX are moving out. Why? We'll find out after the break.
Follow the Money with Ugo Dre. We'll be right back. You're listening to Follow the Money with Ugo Dre.
Welcome back to the second half of the show. Why are companies leaving the NGX? We have a guest today. His name is Uche Joshua Ifeakanwa. He's the managing director of Rustalion Nigeria Limited and Joshua Uche Limited. He's a business coach, a financial markets player. He also plays in the crypto space. He's been active in the financial markets for the last 10 years. Good morning, Uche, and welcome to Follow the Money with Ugo Dre.
Yeah, good morning. Thank you for having me.
Thank you for joining us. Companies are leaving the NGX. Meanwhile, the NGX is actually going out every day and asking for more companies to join. On one of the companies on the list is MRS. They're seeking to ask for delisting from the NGX based on an extraordinary general meeting which they've requested from the shareholders. The meeting is for the 21st of May. Their pre-tax profit of 3.076 billion for Q1 ended represented about 58.34 year-on-year increase. According to the 2024 Q1 financial statements, revenue went up 157.11% to 7 billion. Just to ask, why are they trying to join the likes of Adova, Global Spectrum, Union Bank, GSK, and most recently, who have most recently delisted, and why is MRS doing this? Has the stock market lost its value and its allure?
All right. I will not say that. I will not conclude them that they've lost their form or they've lost all it has to give to the companies that are delisted. I think it's majorly about entities or individuals as to their own plans and the foreseeable future and how they can preserve and also expand. I understand somehow that the NGX has a lot of regulatory obligations that they have to meet, and the cost of running a smooth organization with them, it's at some point alarming for some companies. So if they are leaving, I'm sure they have an alternative means or a way of going about generating capital for their business. And also, I think that might bring in some flexibility as around their day-to-day operation and possible venture from the resources they have at the time. But having NGX on board or having joining them or being listed there, I'm sure there are little to nothing they can do to what they are already doing beforehand. So it's based on individuals, not completely the whole system. The system still functional, yes, it is. I checked this morning, and I was seeing about 55 trillion naira market cap within the NGX. So that's a lot. So if they are opting out from such liquidity, I think they might have something flowing out somewhere that they might want to catch. So I'll leave it at that.
Something flowing out there. I don't know what's floating out there, but I mean, I've just always had this belief that for any economy to grow, you do need a very vibrant stock market. I don't see how Nigeria get out of this growth loop that we'll find ourselves in without having a very robust stock market. I mean, the president yesterday spoke about capital formation as things that he's trying to drive at the summit in Dubai. And how else do you form capital without having a very vibrant capital market, especially driven by equities? That is my concern. And so when you have companies that are delisting out of the exchange, it means that they don't see the exchange as a viable path to capital formation. So how do you then expand? How do you grow? That is the challenge that I have, Joshua. But it's okay. Let's move on to the
Okay.
question. You want to respond to
All
that?
right. Yeah, I actually have some few things to say. See, Nigeria as a place, we've experienced quite some shock in recent time in terms of recapitalization, currency devaluation, and most importantly, inflation. And the uncertainty around there, it's a concern to most investors. So going through the NGX, is it an ideal thing? I think yes. But on the other hand, things like an acquisition or a merger might not be too easy on the NGX. And if really they want to expand or want to source for capital elsewhere, there are some compromise they might be willing to make that the NGX might not be willing to accommodate. So I think they know what they are doing. They've proven the track record over the years that they can stay in business despite the orders they are having in Nigeria and still make profit significantly for the investors. So we'll allow them and watch the next quarter to see what it will amount to.
All right, I hear you. Let's wait and see whether this delisting goes through. Next story is Stanbic. Stanbic IBTC did release its result last week, their first quarter result, and they posted a pre-tax profit of 62.7 billion. First quarter profit. That is up 73% from the year before. Just to put it into some context for fans of Stanbic IBTC, last year alone, the whole of last year, their profit, their pre-tax profit was 172 billion. So they are almost doing 40% of that. My math is correct in the first quarter alone. So looks like it's going to be a solid year for the bank. Like I said, 63% up. But Stanbic was also in the news for something else, Joshua. They said that they were going to do a debt issuance of 400 billion naira, and this is in addition to the 150 or so billion they want to raise via right issue. Of course, you know that's in line with CBN's recapitalization requirement. So while I understand why they are raising equity, what's the debt for? 400 billion, isn't that too much capital for one bank? I mean, 400 billion plus 150 billion. Where is this taking the bank to?
Yeah, 400 billion is actually something very, very significant, and it will not go unnoticed. But in recent times, depends on their their income via interest, and also the recent the events we are having around CBN banks recapitalization and having to bring up a robust economy. I think they're doing that. I checked some files last night and I noticed that they are raising 400 in debt and 150 in equity. I think that's not so outrageous, because they don't want to give out completely the equity for that amount. I think that is something payable, and from time they've proven that they can pay interest or they can pay back their obligations. So for me, raising such debt might be a way of expanding or planning for the next phase. After the capitalization, there's a reason why they are doing it, and most likely is to have a robust economy. And if they have so much liquidity like that, I'm sure that should also increase their lending capacity. And beyond that, I'm sure the cost of operation and the innovations they need to stay in business in terms of technology of software or the management has to come in place. And I'm sure those will not go without incurring some cost. So I think in the long run, they are in for business and they are in for something good. But on the other hand, raising 150 million via equity, I think that somehow might have an impact on shareholders' holdings, maybe lead to some form of dilution in the meantime. But in the long run, if you look at the long-term scale, I think they are fine. They are just fine. I saw their income and the declarations they had. I think it's quite impressive. Well, that's the best I can say.
Quite impressive. By the way, Stanbic IBTC, based on metrics analysis, needs about 90 billion or so, or 91 billion, if I can put it that way, to meet the CBN's target of 200 billion minimum capital for a national commercial bank. Quite frankly, the 150 billion covers it very well. So, just like you said, it appears the extra 400 billion is just to give the bank a bit more capital to play with as the banking space becomes competitive. All right. Guinness as well is on the news. Guinness released its own results, unaudited results. We're waiting for their 9-month result for a bit. So they finally did release it. And just as we've seen with most of the other manufacturing companies, Guinness revenue was up 28% to 220 billion in the first 9 months of the year, compared to 175 billion, same period last year. However, their loss before tax was 60 billion, compared to which is down 7.8% or so compared to previous period. I think the previous period did a profit, so I'm not even sure. You can even look at it in terms of percentage drop or gain, but profit before tax, a loss before tax was 60 billion. And just like most of the other companies that we've seen, Guinness also saw its retained earnings wiped out completely because of this, I guess, and that's pushing its retained losses. Retained losses, of course, is accumulated profits over a period to 53 billion. Guinness also, I think, blames this on FX-related losses. I think they had 83 billion FX loss. Another manufacturing company, succumbing to FX losses. Are there any positives you see in these results? I mean, we know we tend to talk a lot about the losses, but there should be positives here for you, Joshua.
Yeah, speaking about FX losses, sometimes it excites me, and some other time we just look at it passively and just mind our business. But I would say that having FX losses at this point, I don't think, though the losses are significant, they're quite huge, but technically I don't consider them to be losses, because if you don't sell off, most likely there's still a chance that there might be a bounce and you might recover from those depreciation. But on the other hand, trying to edge or trying to put some perspective to it, I think they can as well source locally for alternatives to what they usually use for their production. And I went through their profile, that was last night or 2 nights back, and I noticed that regardless of their losses, they really have a strong market presence in the country, and the customer base is large. And not just that, the operations, I'm sure they are doing fairly okay, regardless of the losses they've incurred. But I read yesterday that they intend paying back some of the loans, those payables via equity, or converting those loans into equity. I don't think that's so much of a good idea, because one, it will put some sentiment around the investors, and most likely we should be expecting the stocks to come down significantly. But diluting, most likely people will be relinquishing control, or some other people might be affected based on the percentage they have in the company. So in the long run, I think one, they should source locally and also try to bring up an efficient system on how to minimize cost. And finally, they should have edge. They should edge against Naira inflation and even the FX, the USD inflation, as the case might imply. So I'll leave it at that. Thank you.
Thank you, Uche. So let's look at Dangote. They just released their Q1 results for 2024. Turnover went up about 101% to 817.35 billion. Despite this growth in Q1, the pre-tax profit just went up about 13.3%. Volumes increased by about 11.5% to 7.07 million tons, a year-on-year increase of 11.1%. The group sold by about 7.04 in terms of that. But the significant revenue growth posted in Q1 was offset by net foreign exchange loss of 63.8 billion, 551% year on year. By all means, another great result for Dangote, one of Nigeria's largest and most profitable companies. What are what are your what are your tail and headwinds for investors as it regards Dangote, despite the fact that there is an FX loss of 551%, but you can see that revenue has grown 101%.
All right. Speaking about the FX loss, 551%, and so that's quite significant. That's a whole lot. Well, that comes to tell you that if they are incurring such loss and at the end of it all they are still having some form of profit, I think they're in business and they will always be in business. And not to say, we understand also that they're like the largest, they're the apex of their market niche. So in the long run, if you ask me, will I invest in Dangote stocks? The answer is yes, I will, because despite all that is happening in the country, I think they have significant control over some of the variables that is affecting them. But for the FX loss, I think they could have done better, either maybe by anticipating or trying to edge around it or to find a way to reduce their FX exposure. Nevertheless, we understand that they're the largest FX holders in terms of entity currently in Nigeria. But at the same time, I'm sure they can actually find a way around it. So for investors, what do I think? Though there are some concerns as regarding the cost of doing business, we can see from the data out there that it has increased significantly. And also that comes to tell that the business is not as easy as it used to be. But on the other hand, I think they've been around for some time. They are experienced. They know exactly what they are doing, and they've not changed management. And year in, year out, they've been in profit regardless of the post event from Corona till this point. So in the long run, if you have to play the long-term game, maybe 5 years, 10 years, I think you can still hold their stock or hold some of their equities. But at the interim, one has to be very careful so that you don't get owned completely. That's when we ask that you should try to diversify your portfolio. But I think fairly, Dangote is doing very well.
Okay, we'll go over to you.
All right, fairly, Dangote is doing very well. Pretty strong result from Dangote. We don't have that much time, so we'll quickly go into the next company that we are profiling this week. Nigeria Breweries is also looking like at doing what some of the other manufacturing companies have done. I think we talked about Nestle. Nigerian Breweries have also said they're going to convert some of their equity, some of their debt into equity as they try to clean up their balance sheet following FX losses. Mr. Joshua, they're going the way of Nestle. Where does this leave shareholders, minority shareholders? If you're converting debt into equity, that obviously is dilution. And of course, like I mentioned earlier, their share price was down. It wasn't down. It was Nestle share price that was down 11% as well. So we don't know what that will mean for Nigerian Breweries share price. But what's your take quickly? 30 seconds before round up.
All right. I would not say it's out of place. I'm sure these are measures they might want to put in place to see how they can find a balance to their crisis. But on the other hand, for minority shareholders, I don't really think it will be so significant because obviously they are minority. That if they are diluting, it's just a fractional movement from where they were to where they would be if eventually they agree to it. But on the other hand, there's an option for you to sell out those stocks before the whole agreement is put in place. And also that's to tell you that if they negotiate very well, if they have a fair negotiation with the people they are owing, their creditors, I'm sure they should be able to find some compromise that might not jeopardize the interest of the shareholders. So in the long, if they do what they ought to do, I'm sure somehow in the long run they should be able to recover from the dilution, or the stocks should appreciate, because if you are diluting to pay off loans or obligations, I'm sure it is with the mind that the company will make profits in the long run and compensate for those people that were affected.
All right, thank you so much for that, Joshua. And then we come to the end of the show. Thank you all for listening. In case you miss any part of the show, remember you can always listen to it on any of your podcast streaming platforms, on Spotify, Apple Podcasts, or anywhere you listen to podcasts. Indeed, thank you for being on this show. We do this every Monday morning, 8 to 8:30 live. Of course, you can catch any other Nairametrics content, podcast, articles on our website, www.nairametrics.com. Thanks for being on the show. Follow us on our WhatsApp channels or any of our social media channels. This is me signing out, Ugodre. Thank you so much, Wade and Joshua. And do have a profitable week ahead.